Good morning, Ashish. This is Cheryl here. We wanted to get your view on the diagnostic stocks. A lot of question marks on the fundamentals of these particular counters, considering that there would be questions about how will these vaccination drive actually picking up steam impact the diagnostic stocks, because there is a kind of feeling in the mind saying that now if vaccinations are going to pick up steam, people are not going to go that much to test the COVID, so the COVID revenue is likely to drop for these diagnostic stocks. So what is your view fundamentally for these particular counter? Is it even a cause to worry about the COVID revenues for these players?
Well, I think firstly to begin with, yes, the companies are doing very well, and the scope for increasing their revenue is huge because largely the diagnostic space in India is unorganized. So with COVID, what has happened is a lot of focus has come on this sector. So there is a great scope for the organized sector to expand now. And all three of them, Dr. Lal, Thyrocare and Metropolis, have been doing very well. And the only issue now is in terms of investments, they are not necessarily good ideas because all of them have run up a lot, especially Dr. Lal Path Labs. So Dr. Lal Path Labs is the biggest, has the largest revenue, has over 200 clinics all over India. The problem is that the run-up is huge, so stock is very expensive. It is at about 60 times next year earnings, so pretty expensive. Other than that, otherwise this company is certainly doing very well. Revenues have gone up, EBITDA margins have improved. They have done a lot of acquisitions last year. So clearly the industry leader, favorite to buy, but not at this price. Only on a significant downside can one look at this stock. The other one, Thyrocare, pricing wise better, but results were not so good. There was pressure on their margins due to very aggressive pricing of COVID tests, and also they had to increase their cost to get into the COVID testing segment. So that also is at best a hold. The third one, Metropolis, is actually the better investing idea because that pricing wise also looks okay, and Metropolis has also very smartly gone into other segments, use the use the COVID testings revenues to foray into other segments, especially elective surgeries, and also the doctor-patient engagement in this company is really encouraging and is doing very well. They have also done the high-tech acquisition. So I think out of the three, I would go with Metropolis. Metropolis also, yes, bit expensive, but certainly a buy on declines. Whereas Thyrocare at best a hold, and Dr. Lal Path Labs, I think, an avoid at this level. Only a significant correction could be an entry point.
Okay, you've summed it up perfectly, Ashish, and I think that will provide our viewers a very holistic picture of which stock to consider to add to their portfolio at this juncture.